So here we are kicking off 2026, and there's this one huge question hanging over the American job market, right? Are all these layoffs we're seeing just a course correction? Or is it the start of something much more serious, like a real contraction? Let's dive in and see what the numbers are actually telling us.
First things first, to really get what's happening now, you gotta look back at last year. In 2025, US employers cut a jaw-dropping 1.2 million jobs. Now, just to put that into perspective, that's a number we haven't seen since the chaos and uncertainty of 2020. And that, right there, really set the stage for all the anxiety we're feeling today. And believe me, that trend from 2025, it is not over. We're already seeing some of the biggest names out there. For talking Amazon, UPS, Verizon, Home Depot. They've all announced more cuts for this year. So yeah, that wave of layoffs that hit so many people last year, it's definitely still rolling.
Okay, so let's get past the headlines for a second. How do we actually measure this slowdown? Let's break down the hard data and see what it really feels like for workers on the ground. One of the biggest red flags for a slowing market is just how long it takes for someone to find a new job. If you look back to December of 2022, the average was about 19 and a half weeks. Fast forward to this past December, that number jumped to almost 25 weeks. That's a huge increase. Let's just put that in plain English. The average job search is now taking almost 6 months. So the problem isn't just about losing a job anymore. It's about this incredibly long and, let's be honest, difficult journey to find the next one. And what's really worrying is that this whole trend seems to be picking up speed. I mean, just look at the latest numbers for people filing for unemployment for the first time. In the last week of January 2026, claims shot up to 231,000. That's up from 209,000 just the week before. That's a pretty scary jump in just 7 days. So, what does that all add up to? Well, as of that same week, January 24th, the total number of people unemployed and collecting benefits stood at 1.84 million. That is a massive, massive pool of talented people who are currently sitting on the sidelines. So the big question is, why? Why is all of this happening? Well, it's not really one single thing. It's more like a perfect storm of different economic pressures all hitting at the exact same time. Let's try and unpack what's going on. Okay, so the number one reason you'll hear, especially from corporate executives, is this. They say they're just correcting for overhiring. During the pandemic, there was this mad dash for talent as companies scrambled to adapt. And now, the official line is that they just hired too many people and are having to, well, recalibrate. But it's definitely more complicated than just that. On top of that hiring correction, you've got the ongoing chaos with tariffs, you've got stubbornly high interest rates. Both of those things are making companies hit the brakes on new hiring. And then there's the big one, a massive corporate investment in artificial intelligence. And this is where we see a brand new force really entering the labor market. As companies pour billions into AI, they're not just slowing down hiring for new roles, they're starting to actively replace some existing ones. Some analysts are now predicting that AI alone could wipe out as many as 20,000 jobs this year. Now, here's something that is absolutely crucial to understand. This slowdown isn't hitting every part of the economy in the same way. Not at all. What we're actually seeing is a tale of two different job markets, with some very clear winners and losers. And the divide is pretty stark. On one side, you have the sectors that absolutely boomed during the pandemic, right? Think tech, warehousing, and logistics. They're now shedding jobs as things normalize. Manufacturing is in there too. But on the other side, you have areas with constant long-term demand, like education and healthcare. They're still hiring. They're still growing. And the pain has been really, really concentrated. If we look back at those 2025 cuts, the tech sector alone lost over 154,000 jobs. Warehousing lost another 95,000. So when you look at the big picture, these two sectors that rode that pandemic wave so high, well, they account for a huge chunk of the correction we're seeing now. But here's the other side of that coin. It's not all bad news. While some sectors are pulling back, others are pushing forward. Just recently, the education and healthcare fields added a combined 74,000 new jobs. So that just goes to show you there is still some really strong demand in certain parts of the economy. So you've got all these competing forces, jobs being lost here, jobs being gained there. What does the road ahead actually look like? Well, the honest answer is, it's incredibly uncertain. And part of the problem is we're actually missing a key piece of the puzzle. Right now, we're all flying a bit blind. The official US government jobs report for January, the one that would give us the clearest picture yet of what's going on, it's been delayed. It was supposed to be out on February 6th, but now we won't see it until the 11th. So that leaves all of us in a bit of suspense, just waiting. And this all boils down to one huge fundamental question. What are we actually looking at here? Is this just a temporary, maybe painful market correction as businesses just get back to normal? Or is this something bigger? Is this the beginning of a whole new economic reality, one where AI completely reshapes the nature of work as we know it? That's the question we're going to be watching all year long.